All right, what is up, everybody? Welcome to another altcoin watchlist video where I show you my picks heading into next week and exactly how I'm going to be trading those altcoins. So, we're not going to do a review of last week's watchlist video, mainly because I was on vacation last week. I picked a pretty good time to go on vacation, so that was nice. Most trends kind of stalled, and BTC kind of chopped, and then retested a high time frame zone. But other than that, we will go ahead and just kind of pick up where we left off and just start from scratch, kind of, because most coins, 2 weeks ago, didn't really hold up all too well. So we'll see how it is. But a couple coins from this watch list will actually be, repeats from last video, I guess. So 2 weeks ago. But yeah, to start off, we have EOS kind of testing the major trend resistance along with this horizontal supply zone. So if this region breaks, I could see a massive sort of trend forming on a much higher time frame. So we're talking about like a multi-month long trend. So maybe establishing sort of like a spot or like an investment, swing position, something like that, with a pretty loose invalidation in terms of percentages, because we're talking about 200 daily moving averages with a what this is a 7 month long range or something like that. No, more than that. So 9 months, right? So pretty high time frame stuff we're talking about. But at the moment, it is showing relative strength. So if you zoom into something like a lower time frame, you have this range that is developed as of the past 3 weeks, which we're currently trying to break out of. Right. So the issue that I run into is there's analysis and then there's actionable analysis. It's cool and all to say, oh, look at EOS, maybe breaking out above the 200 daily moving averages and maybe breaking out of this, massive uh, range high resistance, I guess. But that zone in itself is like a 7% range, right? So it's not really an actionable analysis. It's an analysis. So good on you if you're able to make that analysis, but how are you actually going to go trade it, right? And trade it effectively. So you're trading a 7% range and then your invalidation is, 10% lower, 15% lower. How are you exactly going to approach trading that? And it's like, well, I can't, right? That's the honest answer. So instead, what I do is I scale my assumptions to attribute relevancy, and we'll say, hey, this is a range that developed in the past 3 weeks. Here we are breaking out of that range. So we're probably breaking out of this major resistance level already, right? It's probably going to be pretty much negligible. And then in hindsight, oh shit, we were wrong. This actually was a trend retest, just like it was every time in the past year and a half, is when we deviate back inside of this range, right? So that would be the trigger to actually go short, and then truthfully you would look to trade it from there. But at the moment, I would say 2 hour 200s along with the previous range highs would be an ideal swing long pullback zone, and then we can kind of just scale those assumptions to a much larger degree and try and play into that like year and a half long analysis, which is not really all that actionable, right? So as long as we remain above that range, in my opinion, we threaten that breakout, on a much bigger time frame. If we deviate back inside of the range and we lose the 2 hour 200s, because that is the most efficient trend per show that I could find, then you pretty much would just call it quits, right? I mean, it's like, we're probably wrong, right? We're probably going to look for that push back into range lows at minimum. And then who knows, maybe we even break down below the range and then just, continue the downtrend that has been a downtrend for the past year and a half. So that's EOS currently showing relative strength. That's why it's on the watch list. Next, we have ADA. ADA is also a coin that was on last video's watch list as well. And ever since then, so similarly, we have like 2 hour 200s, you could say, is the high time frame trend portrayal. And ever since then, or that last video, we had actually lost that trend, which made you think, or would make me think, hey, we're probably in for a much deeper pullback. And then that's why I just kind of give my levels. Oh, look, there's a support level here. Oh, there's a next support level there, next support level there. I will continue to look for the next support and the next support and the next support and the next support lower, as long as we remain below this high time frame trend portrayal, right? So ADA has actually been on this watch list, or on these watch list videos, since somewhere over here, I believe. But yeah, 2 hour 200. So now that we've reclaimed that trend, it is kind of just oh, we have the green light again to just continue trending. You want to be sort of fearful of like a range starting to develop because this is some more volume that's being traded, right? It's kind of just like being redundant and it's all this kind of same region. So we are susceptible to just forming a range and not continuing the uptrend. But if you're going to be fearful, there's always a fear to have, right? Regardless of positioning. If you're long, your fear is we go down. If you're trying to trade a range, your fear is we break out of the range. If you're trading a trend, your fear is that we go sideways or break the trend. There's always a fear to have. So the fear is that we range, but the initial assumption is we probably just continue trending. And this was a great opportunity to re-enter on the exact same thesis that we had on the way up, right? 2 hour 200s. And actually at the time, I think it was 3 hour 200s, but it, would have shifted into something more actionable. So 2 hour 200s, probably going to be the thing that I continue watching. And then we can look for a local trend for a little bit more actionable analysis. And maybe you're going to use something like the 30-minute 200 moving averages because they get respected on the downtrend. So when we break out of those, it's a snowball that's forming that cascades into more of like a snowman or the body of a snowman. And then you have that beautiful confluence with your low time frame trend and your high time frame trend. So in the meantime, look to trade the 30-minute 200s. Currently still confluent with the 2 hour 200s, but if the trend continues, then we'll probably just shift our attention to the 30-minute 200s solely. And then once those break, you can divert your attention to the higher time frame trend of the 2 hour 200s. So that's ADA. FTM also was on the last watch list. So that would have been, oh, this is a setup that I looked to take, but some friends took. But yeah, FTM was on the watch list somewhere over here, and then we lost the trend, and the trend is the 30-minute 200 moving averages. So the difference here for FTM is actually the high time frame trend portrayal is the 30-minute 200s. So there's a lot of opportunity for this coin because we're talking about massive trends that are forming, massive, volatile ranges that are forming on extremely low time frames. So just take this trend, for example, right? This leg upwards. We did that along the 30-minute 200s for a 100% move over the course of what, 2 weeks, right? So pretty extreme, pretty exaggerated, trend. And then once that trend breaks, you get a negative 30% move into a major support level over the course of what, a week and a half. And then so you would scale those assumptions and apply that sort of context to say, oh, when we reclaim that trend, we're probably going to see a directionally proportional kind of move, right? So we're talking extremely volatile, high percentage, moves over the course of a week, maybe 2 weeks, maybe 3 weeks, who knows, right? But you want to look for massive trends to form, and rightfully so. So 30-minute 200s, as long as, well, my puppy just sneezed, bless her heart, as long as we remain above the 30-minute 200 moving averages, there's really not a bearish argument for FTM, in my opinion. And actually, that would be the ideal zone to continue, getting into longs and looking for continuation, so on and so forth. And once those break, you would look for a much deeper pullback. Again, the difference here is that the trend on high time frames for FTM is the 30-minute 200. So once those break, you just kind of look for a massive downtrend to form. There's maybe something that is more applicable. So, like, for example, the 4 hour 200s. But in my opinion, when this is what the 4 hour 200s look like, right? And they're over here, and price has not cared about them ever in the past month and a half. Then why am I just going to be, suddenly able to attribute a context to the 4 hour 200s? Now, I can't, right? Granted, they held up beautifully. They were the major bottom before the reclaim of the 30-minute 200s. And at that point, you can come in and say, oh, that's probably, that probably was the local bottom, the market structure low. We can look for continuation from here, right? And continuation of that market structure means a higher high, right? So a higher high into this resistance level, eventually a higher high, and probably into the next resistance, and so on and so forth, right? But don't really have that context, prior to this price action. So now moving forward, maybe you can start to develop a thesis as to why the 4 hour 200s are the next thing to be watching on a higher time frame, bullish argument. But for me personally, the only way I would be able to play this are the 30-minute 200s as it stands with the information that I've been given for FTM. So Next is dot. I believe this is similar. Yeah, this is similar to the EOS thesis where it is breaking out of a 3 week range or so. So it's showing relative strength on these lower time frames. It's probably still lagging and relatively weak on much higher time frames, similar to EOS, right? So I mean, like the market structure is not anything amazing. It's not, it really is relatively weak on a much a much higher time frame compared to BTC, compared to ETH, compared to FTM, ADA, whatever. Just like EOS, but as of recent, it is outperforming. So there's a relative strength that's being showed purely on these lower time frames, which may turn into like the laggards trying to play catch up. And really, they're not laggards. They're always just going to be weaker assets, and then people rotate into them, and then people rotate out, right? So uh, we have like a nice smorgasbord of strong performers like FTM, like ADA, which by the way, MATIC is absolutely deserving to be on this watch list. Some people are going to say, "Oh, how come MATIC is on this watch list? Mercury doesn't know what the hell he's doing." And you're absolutely right. I don't know what the hell I'm doing, but only for the MATIC chart, right? So I just don't have a way of trading MATIC, to be honest. And also, historically, MATIC has been the cursed coin for your boy. So I try to stay away from it. And honestly, it just doesn't really respect my system all too well. So I can't really trade MATIC. But if you have a way of trading MATIC, I do not. Then it is definitely a coin to be trading because it is incredibly strong. I have not traded MATIC probably since 2019. So but yeah, other than that, dot still relatively strong in the short term. So pretty simple thesis. You want to look for as much confluence as possible in the event that we get a pullback retest in this previous range high, and you want to assume that we will likely continue that trend moving forward. Why? Because we broke out of the range. So that is the new trend. So you should look for continuation of that trend. In the event that we break down, so maybe you can use something. I don't know if it would be the 30-minute 200s. I'm not quite sure. You have to just kind of keep an eye on this. I would say probably it is going to be the 30-minute 200s just because how they've been respected prior to the breakout. But if we lose, say, the 30-minute 200s along with these range highs, then the thesis is invalidated. The laggards continue to be laggards, and really that's just a euphemism for they are weaker assets, and people just like to cope, and then you probably just look for continuation to the downside, right? So that would be like a negative 10% move, and that would purely just be continuation of the range, right? That's not even really a bearish argument. That is just simply continuation of the norm. And then the real bearish argument comes when you lose that range low as well, right? And this is a massive zone, but you would scale your assumptions and give yourself a more actionable analysis and say, oh, look, this is our breaking down of the range, right? So maybe we're not going to care about this zone. And then, in hindsight, on a higher time frame, you come back a week or two later and then we didn't care about that zone. So that is dot. And then we have three more. We have ocean. What is the trend for ocean? I think it is also 2 hour 200s. Yeah. So locally, it is the 2 hour 200s as of the later half of this trend thus far. So 2 hour 200s are the high time frame trend portrayal. Probably want to establish a position along those. And in the meantime, local trend, let's say 30-minute 200s, and then that would be that confluence coming into play. I believe similar to ADA. Yeah, I think ADA. But yeah, 30-minute 200s along with the 2 hour 200s. This was the confluence in those, both of those regions, together acting as support, developing a stronger thesis, a more concrete foundation as to why you're entering that trade in the first place. You can, justify it from many different angles, including market structure, including a local demand zone, right? All those kinds of things. So moving forward, I would look for the 30-minute 200s to be the local trend portrayal for the overall leg upwards on the 2 hour, or on that 2 hour 200 MA trend. Just like it was for this, right? We're not testing the 2 hour 200s. Everyone is seething because they're not getting a pullback, whatever, right? And that's because we're trending along the 30-minute 200s for that specific leg upwards. And what do I mean by leg? I mean by, I mean, when you zoom out to the daily, you can't really see what's happening. There's no structure. There's no like, highs and lows. It's just one leg, right? This is another leg. You only saw that leg once you lost the 30-minute 200s. You test those 2-hour 200s, right? That's that trend. So you reclaim, and that's going to be another leg. You would assume that these legs continue in the form of higher highs because they gave you a higher low. And because we are trend traders, or at least I am, I'm just going to look for that next higher high, just as I have been, just as I will continue to do, right? Until it stops working. Oh, all of a sudden you lose your 2-hour 200s. Okay, stop looking for higher highs, right? And you're probably going to go on and make a lower low as well. And once that, gets quote unquote confirmed, which happens here, then you kind of just give up your bullish arguments on Ocean. And you won't see this coin on the watch list anymore. So hopefully that is pretty easy to grasp. I know it's kind of foreign language for a lot of us. But VeChain, very similar to EOS, very similar to DOT. And again, taking the smorgasbord of like different kinds of setups, but same exact gist. Won't spend too much time on it. Previous range highs. This is, you could say, a deviation. Doesn't matter. It's just our way of justifying we expected further upside and we did not get further upside. Here's why. Right. And it's like, okay, this is now a deviation. Had my stop below here. I'm sorry, above here and short into range lows. And then, oh, look, we're tapping some random green and blue lines that may or may not be relevant. And it's like, they're not really all that relevant. How do I know they're going to be relevant? I don't. Oh, they ended up being relevant anyways. And you can tell that because you reclaim that local trend, right? So 30-minute 200, same gist. Reclaim the 30-minute 200s. Oh, wait, this is probably a local bottom, right? If not a major bottom. Oh, look, here we are breaking out above the range and continuing the trend in the first place. Oh, yeah, it's probably uptrend, just like we assumed that time and then got proved wrong and had to readjust here, right? So same exact kind of concept, 30-minute 200s, previous range highs, look for continuation on a much higher time frame, similar to EOS, similar to DOT. And then last one, I'm sorry if you hear my puppy whining in the background. Last one would be Rose. So on the daily, seems like we're at major resistance, something to be aware of. But on the high time frame trend portrayal, the 2-hour 200 moving averages, definitely something to watch. Although as of locally, we don't really care about them. So we're continuing that exact same trend. We are resuming the higher high, higher low market structure, blah, 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 whatever, heading to the top right corner. We just don't really care about the 2-hour 200s right now. So why not? And it's like, well, because at the moment you care about your hourly 200s. So if you understand anything about probabilities, we will probably go on to test, or we probably have a higher chance of testing the 2-hour 200s once these hourly 200s are broken. Congratulations, you now know probabilities 101. So that's the way that my brain works. That is that snowball to snowman kind of way of thinking. So as long as we're above those hourly 200s, there is going to be the chance that we do break out above this resistance and then head to whatever the next resistance level is. I don't know if it's actually 14 cents, but that's just what I have on my chart, right now. So if that trend continues, which it very well could, because we're still above those hourly 200s, we're pretty much bullish on every relevant time frame. Then you just kind of look for expansion and continuation, as you should have been. In the event that they're broken, you're allowed to scale your assumptions to say, well, we might get that pullback negative 10% lower into the 2-hour 200s, where I can make the same arguments all over again, just as you probably would have back here. Right. Oh, let me look for that pullback lower. Okay, 2-hour 200s. All right, they held, and then kind of a little bit of like range, choppiness, whatever, and then eventually continuation. So, just 2-hour 200s are the main thing to watch. In the meantime, hourly 200s, and once both of those break, you will probably not continue the trend, right? And at that point, you probably just want to stop trading rows, at least long biased, right? So yeah, that is the end of my watch list. I do want to say, for anyone who made it to the end of the video, I am doing a Bybit giveaway. So anyone on my referral link for Bybit, I'm giving away $500, and that will be split up between two people. one who has already been on my referral link from prior to the month of February, and one to someone who is just now signed up in the month of February. So $250 to each of those two people. So if you're on the ref link, you have a pretty solid chance of winning, truthfully. If you want to sign up and make an account, all that you have to do is sign up under my link, which is in the description below, make an account, and then deposit $100 USDT at least, right? So do it like 101 and place one trade, just one. It doesn't matter, just open and close, wash trade. I don't care what you do, right? But that qualifies as a first time deposit. That means that you're now eligible to win the $250 giveaway. And at the moment, there are a whopping two of you who signed up in the month of February. So if just one more of you sign up, that means that you have a 33% chance of winning $250. In my opinion, that's not too bad. So, yeah, hopefully you guys enjoy these watch lists. If you just want to support me, then signing up and trading on my Bybit ref link truly is the best way to support me. So I really do appreciate all you guys that do that, regardless of the giveaways. I'm trying to give back to you when I can, and yeah, thank you guys so much. I hope you enjoyed. I hope you're getting value from these videos. Much love and take it easy.